A and B are in partnership, sharing profits and losses in the proportion of 3:1 respectively. They admitted C into the partnership on the following terms. C is to purchase one-third of the goodwill for 20,000 by paying cash. Future profits and losses are to be shared by A, B, and C equally. Set out the entry to the above arrangement in the firm's journal. Option A, B, C, and D are given to us. Let us do one thing. Let us work out this problem and then look at the solution and pick the correct solution. C purchases one-third of the goodwill for 20,000 by paying cash. Future profits and losses are to be shared by A, B, and C equally. So there is a change in the profit sharing ratio. Let us see what was the old ratio. 3/4 and 1/4. 3:1 was the old ratio. 3/4 and 1/4. C purchases one-third of the goodwill for 20. They admit C into the partnership one-third. And what is the new ratio? Profits are to be shared by A, B, and C equally. So the new ratio is one-third, one-third, and one-third. So C gains one-third, and let us see what they lose here. This is if I take 12, old ratio minus new ratio, 12 divided by 4, 3 into 3, 9, minus 4, 12 divided by 3, 4 into 1. So 9 minus 4/12 or 5/12. As far as B is concerned, again I take 12. So 12 divided by 4 is 3, minus 12 divided by 3, I get 4. So here he stands to gain. He stands to gain. There is a change. There is an admission in the new admission of a new partner. There is a new profit sharing ratio. By this, an old partner stands to gain. So what do we get here? We get minus 1/12. So A sacrifices 5/12. 1/12 of this goes to B, and 4/12 has actually gone to C. That is how this profit sharing ratio has come about. The new profit sharing ratio of one-third, one-third, one-third means A has sacrificed 5/12, 1/12 of it to B, and 4/12 of it to C. So what would be the accounting entry? Entry is cash is brought in by C. So if cash is brought in, it's cash account debit. What is the amount of cash brought in? 20,000. To C's capital is 20,000. And next, C's capital account is debited with what? Now, if 20,000 is for one-third share, one-third is equal to 20,000. That means 1 is equal to the full value of goodwill is equal to 20,000 into 3/1, or 60,000 is equal to 60,000. So C's capital is debited with his share. That is one-third is what he is gaining. One-third of 60,000, 20,000. Who else is gaining? B is also gaining by 1/12. So it should be B's capital account debit by how much? 1/12. How much? 1/12 is his gain of 60,000. That is 5,000, right? To A's capital account. To A's capital, who is making all the sacrifice? It would be 25,000, which is the same as 5/12 of 60,000, which is the same as 5/12 of 60,000, 25,000. So this would be our accounting entry. Now here it's the net effect. C's capital has been credited by 20,000. It has been debited by 20,000. If we combine these two entries, what we get is cash account is debited by 20,000 and B's capital account is debited by 5,000. A's capital account is credited by 25,000. Net effect, if we combine the two entries, what we get is cash account debit 20,000. C's capital account is credited, C's capital account is debited, it is offset. So B's capital debit 5,000 to A's capital 25,000. Let us look at the options. Cash account, all the options have cash account debit 20,000. B's capital account has been debited with 5,000 and A's capital. So option B seems to be the correct option. Alternatively, in a multiple choice question format, we could simplify the calculation. We know C is to purchase 1/3 of the goodwill for 20,000. So total value of goodwill is 20,000 into 3 by 1 or equal to 60,000. We know this, right? So what we could say is goodwill of 60,000, how was it split between A and B? It in the ratio 3:1. That means it was 45,000 and 15,000. 3:1. This is how the goodwill was shared earlier. Old. New ratio is equal to 60,000. Therefore, it's 20,000, 20,000 and 20,000. So what happens is A loses, sacrifices 25,000. B stands to gain. B was getting 15, now he will get 20. So B's gain is actually 5,000. And of course, C did not have anything. C stands to gain also 20,000. So this is another way in which we could do, where we say what is the effect? We know cash comes in amounting to 20,000 and the sacrificing partner's capital account, this will be credited. Gaining partner will be debited. This we don't need because he brings in, when he brings in, cash account is credited to his account. For his share of sacrifice, his account is debited. So basically, we could say cash account debit 20,000. B's capital account debit 5,000 because he stands to gain, and A's capital account is credited with 25,000. Next, if old ratio between A and B is 1:1 and new ratio between A, B and C is 4:3:2, recorded goodwill of 90,000 appears in the balance sheet. Which accounts will be affected if they decide to write off goodwill immediately? If there is goodwill of 90,000 in the balance sheet and it is to be written off, it will be written off to old partners. It will be written off to old partners in their old ratio. So what is the entry? What are the options? A account and B account. B A account and C account. Option C B account and C account. None. So here 90,000 will be written off to the old partners A and B. A and B in the old ratio, which was equal. The accounting entry here would have been, just in case, accounting entry would have been A account debit, B account debit, 45,000, 45,000 to goodwill, 90,000.